Welcome back to another video. In this video, we are going to go over the basics of fundamental analysis. I'm going to break down what is fundamental analysis, quantitative versus qualitative analysis, fundamental analysis versus technical analysis, and key financial terms that we should know in fundamental analysis. So let's jump right into it. What is fundamental analysis? So fundamental analysis is a method of determining a stock's real or fair market value by analyzing financial and or economic factors related to the company. So when we look into fundamental analysis, we are looking into in depth about the company. We're looking at how much money the company makes. We look at the revenue, earnings. We're looking at the competitors. We're looking at a lot of different things when we are doing fundamental analysis. Now, in fundamental analysis, there's two types of analysis. There's quantitative and qualitative, right? So what is the difference? So in quantitative fundamental analysis, this is financial data such as the following: balance sheet, income statement, statement of cash flows. So basically, when we do our quantitative fundamental analysis, we are looking at real hard numbers. We are looking at how much money has the company made, is the company growing, are they profitable? How much money are they making? How much money are they losing? What are their liabilities? We are looking at actual hard financial numbers that are real. That's what we're focusing on when we are looking at the quantitative fundamentals. Now, beyond the quantitative fundamentals, there's another type of analysis which falls under fundamental analysis, and that is qualitative fundamentals. Qualitative fundamentals are aspects of the company that aren't explained by numbers. So for example, it could be management, it could be competitive advantage, it can be the business model, right? So there's other aspects, right, in fundamental analysis that people look into, which is known as qualitative fundamental analysis. They'll look at who are the competitors, what's the competitive edge of this company, how's the management, is the management actually good, what is the business model? Right? Is the business model, is there demand for the business model? Like for example, if it's a marijuana company, is there demand for marijuana? Marijuana is getting legal in a lot of countries or states or a lot of states. That's actually giving that company a huge edge. And that's where people focus on quality fundamentals and they start looking into other things that aren't real hard numbers. So for example, what is the difference for fundamental analysis versus technical analysis? So in fundamental analysis, we focus on a company's financial performance and other economic factors related to the company. Once again, how much money the company makes, is the company growing, are they profitable, who are the competitors, what is the competitive edge, how is management, and things related to that nature. So real, actual, hard facts. Next, we look. The difference between fundamental analysis and technical analysis is that in fundamental analysis, it is primarily used for long-term investments. So majority of people that are investing in the long run, 5 years, 10 years, 15 years, 20 years, and so on, they're looking at the fundamentals of a company. They're looking at a company and saying, okay, this company is growing. They are increasing profits, right? They have a lot of, like for example, right? A simple example could be a company like Toys R Us. Toys R Us's business model failed because a lot of people are not going into retail stores, right? Everything is online now. So on the fundamental aspect, they're not a great investment or maybe a long-term play because of that aspect, right? Now looking at Amazon, Amazon has shifted everything online. Since Amazon has shifted everything online, on a fundamental aspect, they're a great play. Now beyond the fundamental analysis aspect, we have a technical analysis. Technical analysis, we focus on a company's stock price action and everything on the chart itself. Technical analysis is primarily used for short-term trading. We use it for short-term trading. Now, what I want you guys to understand is what we're going to do is we are actually going to combine fundamental analysis and technical analysis. If we combine them, we end up having a higher probability of success. Now, when I say combine them, I don't mean we're gonna go in depth in each and every single company, look at how much they make, look at how much they lose, look at even if they are profitable, look at their competition. We're not doing that. As traders, we're more so focused on price action. But what you have to understand is fundamental analysis is what influences a stock's price. So for example, let's say we have 2 points here. We have news and results. In this situation, news and results could be good. Here, news and results could be bad. Once news and results hit, there's sentiment created, right? Once the sentiment comes out, it gives us expectations, or it gives us an idea of what the stock will most likely do. Those expectations go out, and depending on the reaction of the stock price, stock either goes up or stock either goes down. I'll show you guys an example. If you take a look right here, fundamental analysis with price action. Let's break stock Roku down. So if you guys take a look right here, stock Roku had earnings. They beat earnings. Company's growing at a very fast pace. Now, as they beat earnings, phenomenal earnings, right? The stock price gaps up. So we already have strong fundamentals. Company's growing. They beat earnings. They're surrounded by a lot of bullish sentiment that is giving us a very high probability that this could be a great trade and we can play it on the upside. That's where we look at price action. Another example with the same stock, Roku, is right here. So Roku gets a new competitor, Apple, which will negatively impact the qualitative aspect, and this will cause the stock price to take a hit. So on this day, Apple announced that they were getting into the same business as Roku is getting into, which is a streaming business. That, on a qualitative aspect, is going to affect Roku, right? Now, on the fundamental qualitative aspect point, it affects Roku. Once we identify that this could possibly affect the stock, we then go to price action and then we take on a trade. This is very similar to having a catalyst, right? And I will break down the catalyst in the upcoming videos, but it's very similar to having a catalyst. There's a reason, or there's something behind this move. And like I said, fundamental analysis at times plays as a catalyst. It is something that drives the stock price up or down depending on the move. So keeping some ideas of fundamental analysis and understanding it to a certain extent is good, even though we are just traders. We don't have to go in depth into fundamental analysis, which is why in this video, I'm not breaking every single concept down, because I think as traders, that's not extremely necessary. But having a strong understanding of just the basics itself is important. Now let's break down two key terms that you guys are going to see that are widely used in fundamental analysis. All right, so here we have earnings per share, known as EPS. This is something you guys are going to see a lot. I'm going to break down how it's calculated, what it means, so next time you guys do see it, you have somewhat of an idea. Like I mentioned, I'm not going to go in depth with the formulas because the formulas do get very, very complicated, and there's a lot of other things that you have to factor in. I'm just going to look at the basics so you have an idea on what it is. Like I said, as traders, we don't have to go in depth with fundamental analysis. Now, EPS. What is EPS? EPS stands for earnings per share. It is a measurement of the net income earned per each share outstanding. So basically, it tells us how much income is earned from each share, right? So for example, let's say company ABC, right, has net income of $50,000 during 2019. That means they had made a profit of $50,000 in 2019. And now let's say in 2019, company ABC has 1,000 shares outstanding. They have 1,000 shares available. Right now there's preferred shares, common shares, and then there's dividend that you kind of have to, factor in as well. But like I said, I'm not going to get in depth with this idea because we're not going to focus so much on it. So I don't want to give you information that you're not going to heavily use, but just having an idea of what EPS is pretty good enough, right? Now, the way we get the formula is you divide net income by common shares outstanding. So basically, the company has made a net income of 50,000. So you take 50,000 and you divide it by the amount of shares the company had that year, which is 1,000. Once you do that, you get an EPS of 5. That means based on each share, the company earns $5 per share. Right now, there's a question people have: what's a good EPS? What's a bad EPS? There's a lot of different answers to that, right? For example, if a company is growing very fast, or if a company is or if a company stops growing very fast, the EPS obviously gets affected. There's a lot of reasons why it could go up or down, which is why I don't want to once again get in depth with it and explain what's good, what's not good, because as traders, we're not investing in the long run. So looking at EPS and analyzing it and trying to calculate it is not something we're looking to do. We're looking to trade price action, and just understanding this when it does pop up is obviously a good thing. And I want you guys to understand everything instead of just seeing something and saying, I don't know what this means. Now let's break down the next concept. Next concept is price to earnings ratio, which stands for PE ratio. This is another thing you guys are going to see a lot. So the PE ratio is the price an investor is paying for $1 of the company's earnings. Of a company's earning, right? Now, for example, let's say we go back to company ABC. Let's say company ABC, right, share price was or is $177.40. The EPS we got in the last slide, right, was 5. So all we do is we divide the price per share by the EPS. So we need the EPS for this. So we get $35.48. This is what a lot of investors use to basically analyze a company very quickly, so they don't have to dive into the fundamental aspect of the company. They can look at this and understand, hey, am I paying a lot for a company? Is this company overvalued, or is this company undervalued? Like I mentioned, that's very hard to kind of identify, because sometimes if a company is growing very, very aggressively, it will usually have a high PE ratio. But once again, as traders, I don't want you guys to focus on this so much. I want you just to have a basic idea what PE ratio means and what the basic fundamental terms are. So when they do pop up, you have a solid understanding. Just to recap, as traders, we care about price action. We care about short-term price movements. We are not investing for the long run, so that's why we don't really care about diving in depth with the company and saying, okay, the company doesn't make money, I'm not going to buy the stock. A company could not be making money, but the stock price could still go up. Our job is to understand what set of news came out. Is that set of news driving the stock up or down? And our job is to play that with price action. Having some fundamental terms under your belt will help you understand the market a little bit better, and that's why I kind of went and made this video, so you understand the fundamental side of trading.